not negligent inactivity.
Yeah,
That would be
that's
a good
great.
debate.
Not negligent
Masterful.
activity. That's right.
Yeah. We should have a debate where the line is between negligent inactivity and masterful inactivity.
And season 8 begins in 3, 2, 1. You found the FarrCast, your weekly podcast with conversations from across Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast, season 8, ladies and gentlemen, season 8. We've made it again. Here we go. Can't believe it, but we thank you so much for being with us as we enter season 8, lucky season 8. And it's big, and we're lining up guests already. We're going to have a special coming up on oil and energy and nuclear power from Washington lobbyists who've been fighting to get nuclear power open for over a decade in various states. Everybody thinks it's a great idea, and then it hits all of the regulatory agencies and they can't get it done. We're going to try and explain what's going on with energy, the energy grid, and how AI is sucking up energy. AI is using about 3% now of the nation's energy. It's going to go to 8% over the next 3 years. The energy necessary to support AI and data centers. Can you believe it? We're going to talk about it on the FarrCast, tell you what it means for investing. You're not hearing me really get into the international side, geopolitics. They're all important. But we do have these fundamental issues we have to straighten out. And I think the bigger trends here are energy and AI, at least domestically, have been. They're going to affect the economy dramatically. We're in a presidential election cycle. 40 days before the election, folks. We are 40 days out before the presidential election. We're going to talk to Mahaffee coming up here in season 8. Jesus spent 40 days and 40 nights wandering in the desert. I bet we feel about the same way he does when he came out of the desert, if we're that lucky after 40 more days of this political nonsense. Let's look at where markets are. The Fed has changed policy. Okay, there's a trend, and there are a lot of historical statistics about what happens when the Fed does that. You see a change in policy. 12 months later, markets are higher historically. I wonder what Jim Lebenthal is going to tell us about that and what Jenny Harrington is going to tell us about that. She's our segment 3 guest this morning. As we begin this morning, futures are up, and it's been a good week for tech. And that pause for the fabulous 7, magnificent 7, splendid 7, you tell me, stocks, there's been a pause. There's been a little bit of a pullback. While everything else has done pretty well, markets are up okay. Are they just pausing? Is this the last blow-off stage? Are we going to see these things down 10 or 20% a year from now? I don't know. But it doesn't seem like they're going any away here. It seems like they've got another leg to the upside here, and the risk trade is back on. How do you manage risk, and how do you think about your portfolio when things are at an all-time high and nearing all-time high, and S&P 6,000, if you can imagine? Well, I call Lebenthal. That's what I do. Jim Lebenthal's a partner at Sarity Partners, CNBC contributor, my wonderful friend. Good morning, Jim Lebenthal.
Michael, good morning. It's so good to be with you on the season premiere. I feel like if this were a webcast, we'd have to have something like the Love Boat intro, where your guests appear in circular nautical themed inserts. And appearing today, Jenny Harrington and Jim Lebenthal.
Guest star. Yes, I like the guest stars.
Of course, the way I look, it's a good thing. This is just a podcast.
I can say the same thing for me, too. Hey, Jim, you heard my intro. What did I miss today?
I think you didn't miss anything. I think there's a tone in how you're speaking and what you're saying, and it's one of calm. Now, it may be the calm before the storm, but last week we got the 50 basis point cut from the Fed that the markets wanted. The geopolitical conflict across the globe continues, but seems to not be affecting either the global economy or the U.S. stock market. You've got China taking some steps to stimulate its economy. And I think it has investors sort of feeling pretty good about things. We got an earnings report last night from a major chip company that would seem to indicate the chip cycle is intact. You know, when you have comms, you of course, just to go back to where I started, as a sailor, you look at the horizon and you think, well, what's coming over the horizon? The obvious thing to think about is the election and ramifications thereof. But as you pointed out, it's 40 days away. In stock market terms, that's a long time away, and it's not something that and I'm going to dare to say you would recommend that clients take any prophylactic action in their portfolios for. So just to summarize, things feel good right now. I'll give you somewhere that you may want to go in this conversation is, hey, the markets as measured by the S&P 500 are trading at 21 times next year's earnings. Do we really think that the S&P 500 is going to appreciate from here? It may, but I think this is more than ever an important point in time to think about what stocks to own, what sectors to own. Michael, no surprise to you, no surprise to our listeners. I still continue to favor cyclicals and small caps, which have worked okay this year, but certainly not as well as technology. And I do think they will catch up in the months to come.
I think the calm approach first is, and I appreciate that. I take that as a great compliment. It beats the hell out of boring. I get that too. Oh, he's so boring. Yes.
You think I was insulting you? I was not. I mean, let's face it, there's a lot of hysteria in our world, and I appreciate it when people look through the near-term chop at what's really going on.
I've quoted this line so many times on the FarrCast from the Desiderata, only because it's just one of my favorite lines. It made me laugh the first time I read it, and I chuckle every time I read it. And the lines, it's two lines in the stanza from the Desiderata, and they are, and whether or not it's clear to you, no doubt the universe is unfolding as it should. The universe is unfolding as it should. Well, okay. See, Lebenthal just laughed. Harry actually just laughed. I see him on the screen. Okay, probably the universe is going to unfold as it should, whether you're upset about it or happy about it. And the stock market really is best thought about that way. It's all unfolding as it should. But the problem is it unfolds over decades, and we have been taught to live in 30-second or at least 3 or 4 minute intervals, as those are the breaks, those are the information periods between commercial breaks. Awful. Turn off the television, turn off the radio, think about the long term, and buy good stuff and hold it. And when you listen to what Jim just said, with a market trading near all-time highs and stuff that has appreciated 5-fold in just a year or two, hey, maybe we should look at some really good companies that haven't done jack, that are still growing, and that might be appreciated over the next few years. So, Jim, this is an emotional time with elections and what's going on in Ukraine and in Israel and in China that seems to be slowing, though stimulating. And I think Xi Jinping, as I've said for the past few years, has just absolutely ruined the Chinese economy in pursuit of his philosophical sort of an ideal. And if you don't have an economy, you don't have an ideal, Mr. Ping, Mr. Xi. I think they just refer to him as Xi. But however they refer to him, he's not doing China any damn favors, which is good for the U.S. With all of this noise and all of these headlines, Jim, what do investors do?
Well, we go to the tried and true part of the playbook, which is you invest in equities because that's where you get the best long-term returns. And look, it's wonderful that interest rates are positive in after inflation terms, but you're still likely to get better returns for the next few years in stocks. And if you have an underlying queasiness about, hey, yeah, but stocks go down as well as up, just stay in the highest quality of stocks, and you don't have to worry about that. You don't have to worry about them going down.
Well, they still go down.
Yeah, I was about to say, they go down, but they come back, and they come back more than they go down. I think, though, as we're talking, and again, I'm just observing that we are an island, you and I, an island of calm in the ever steady stream of hysteria when it comes to financial markets. I have to say, I think we're in a good spot for the next few months. And that may well include the election. I'm casting aside, any concerns that the election might be hung, so to speak. I don't know if it will or not, and I don't think that's germane to the conversation. What I do think, and I had a thought this morning that I'm going to share with you, Michael, and our listeners for the first time. I want to first say this is not political. This is about policy. We now have a Fed chair in Jay Powell, who is very seasoned and very successful. I don't care what you think. He is very successful. He has kept this economy growing while bringing inflation down. We can lay part of the blame for inflation getting out of control at his feet, but let's face it, it wasn't him alone, not by a long shot. Anyway, as we think about this election and policies that come out of it, I, as an investor, solely in that purview, would rather see Mr. Powell continue as chairman than get replaced with a new chair in a violent and uncertain world, because new chairs are often tested, in fact, always tested in their first few months on the job. Can anyone remember Ben Bernanke in his first few months on the job giving a quote off the record, unquote, interview to Maria Bartiromo that was anything but off the record? Geopolitically, new chairs get tested quickly. I'm just saying, again, being apolitical, but speaking about policy, I would like to see this Fed chair continue for at least the next year or more.
I couldn't agree more. I think that Jay Powell has navigated some amazingly difficult waters. He has made a couple of mistakes that he has discussed and talked about, but overall, he kept the economy from going into depression. He kept us alive. Did he do too much? Did he spark inflation? Yes. Have they seemed to have cured the inflation? Seem to have cured the inflation. And the economy overall has performed very well under Chairman Powell's tenure. If you look to this election thing, I'm going to ask Mahaffee what the odds are coming up here that we're going to know Wednesday morning after the presidential election who the president of the United States is. And I bet he tells me they're not really likely, and it could be months. And that gets very upsetting for folks. But harken back with Lebenthal, Harry Jennings, and Farr, who all were around in 2000 when we had George Bush and Al Gore, and the Supreme Court had to decide whether they were going to recount votes in Florida and hanging chads and all of these other damn things. Want to know what's important about that, folks? The Dow Jones Industrial Average was 10,921. 10,921 when we were losing our minds over that. It's just right at 42,000 today. You think you should have sold back then? I'm not thinking so. This is the point that Lebenthal and I are trying to make as we think about these long-term things. We're saying the economy has been through turmoil, but it's basically okay. It's okay. We're going through a landing. Hard landing, soft landing, it typically means lower contraction. Lebenthal saying stocks are 21 times next year's estimates. They're not cheap. Be careful, be disciplined, be dispassionate, and think about the long term. I mean, we keep saying the same thing. It sounds boring, but this is how you make money in markets, Jim. What am I missing?
I don't think you're missing anything, but I want to add to what you're saying about the election of 2000. That should be on people's minds. We should understand that as terrible as it is, what happened in January of 2020 is an echo of what happened in 2000, and the world is unfortunately used to it. So whereas every one of us grew up with an election decided on the next day and one candidate making a conciliatory, genuine call to the other side, we are now used to a world in which that doesn't happen. It would be nice to think that it will happen. Hallelujah if it does. But the markets, the economy, and all of us will get through whatever the election brings. And I'll leave you with this one rather tactical thought. What I'm hoping for coming out of this election, and I'm not going to give away my politics, is an election that doesn't have a sweep. Whoever wins the White House, I want one House of Congress to be in the other party's hands. That's the way that bad laws are avoided. When one party sweeps, bad laws get enacted. It's really that simple, and that's what the markets want.
Well, it provides stability, and certainly markets want stability, though I have one thing I want to talk with Mahaffee about coming up here is it really possible to have real policy get through the first year if we have a very close Senate and a very close House? Let's say that the predictions are true and the House goes modestly Democratic as opposed to its current position as modestly Republican, and the Senate goes modestly Republican as opposed to modestly Democratic, again, divided but modestly. If President Trump gets elected, can he extend those Trump tax cuts and estate tax things past the end of 2025? I think it's going to be very difficult. So to your point, policy that you want or policy that you don't want is going to be really difficult to get through. And it's what presidents will be able to do by fiat. Actually, tariffs are one of those things a president can do by fiat. So we have to watch out for that. Jim, Fred and Ethel, your final word to get us through till the next time you're on as they think about coming into the end of the year. Tell them what to do.
Play the long game, folks. We are blessed to live and invest in America. I really mean it. We are. And there may be one day, generations from now, when that statement is not true, but it's true now, and it's likely to be true for the foreseeable several years. So let's not worry too much about day-to-day movements in the stock market. Invest for the long run.
Long run. Listen to Lebenthal. I've said it before, and I'll say it for years to come. Thank you so much, Jim. Coming up, Mahaffee. What in the hell is going on with this country? That should be my intro for Mahaffee every week. Please stay with us.
You can hear the sound of surf guitar, which means it's time to go to Chicago, surf capital USA, and our good friend Dan Mahaffee. Now here's your host, Michael Farr.
Welcome back to the FarrCast. Now, still in Season 8. I still can't believe it. I'm going to keep talking about it. Season 8. Thank you again to all of our listeners out there who make this possible. And thank you for the notes that you continue to send us each week. It's terrific. We love hearing from you. We love that we make a difference. We love that you learn from the show. I had one CNBC viewer and says, I don't see you on CNBC, but I'm glad to get my Farr fix on the FarrCast. Glad you're getting the Farr fix. God help you. Dan Mahaffee has been with us for all 8 seasons of the FarrCast, joining us again this week from Illinois. Welcome back, Dan.
Thank you, Michael. Good morning. Season 8. Wow.
Season 8. Wow. That's a good place to start. Dan, we are 40 days before the presidential election. 40 days. It occurred to me that when I studied theology in college, which I studied a lot of, that was not my major, but there were a couple of numbers in the Bible that everybody always wanted to talk about. There were either 3, there were 7, there were 12, or there were 40. Those were the numbers, and you can trace them all through the Bible. It's kind of interesting stuff if you're kind of wonky that way. Jesus wandered in the desert for 40 days and 40 nights, according to the New Testament. 40 days and 40 nights wandering through the desert. I bet Jesus had a better time of it than we're going to have over the next 40 days.
Yeah, I agree, Michael. I'm ready to wander off into the desert for 40 days and just come back and hope there's an answer, but it might not be in 40 days either.
It certainly feels like through a glass dimly, are we seeing, that was another biblical reference, folks, through a glass dimly, are we trying to figure out any of this and waiting for that small group of Pennsylvanians to come out of the coal mines and figure out whatever it is they're going to figure out and figure out who's going to be the next president of the United States? It just seems to be we're caught in this morass. What do you see now? How are you seeing this as we enter the 40 days and 40 nights?
Yes, right now we're at a point where you look at these poll numbers, it's tight. I think we talked about how in the much of the end of season 7, how the Biden exit brought this back to that 47-47 race. And boy, sure do those poll numbers show that. Right now, if you threatened me and asked for a prediction, I would tell you to take the quarter out of your pocket, flip it 3 times, and you probably have your answer there on who wins.
Oh, come on. Everything I'm seeing in the press now says Kamala Harris is ahead by 5 and 6 points and she's got the edge and blah, blah, blah. And then somebody else comes out and says, but wait a minute, she could still win the popular vote and he wins the electoral college. And when he wins the electoral college, he's president of the United States. So
yes. Don't look at the national poll numbers. That's distraction. Look at likely voters, not registered voters. And then also look at where Harris's lead, although slim, is compared to what Biden's lead in 2020 and Hillary's lead in 2016 were. And you still have to ask the question, are the polls not showing a sizable number of Trump voters? That's what you hear from the Republican side. But Democrats, not to have the cloud of darkness over them just yet, will tell you these polls also aren't picking up the surge you see in young people coming out to register to vote. And that you're getting a lot of again, that imbalance where Democratic or independent leaning voters seem comfortable starting already now to early vote and vote by mail, which these campaigns will say will allow them to bank votes.
Mahaffee, wait, I'm going to interrupt. You are clarifying absolutely nothing for me right now. I am not gaining insight, not number one, not the least, other than holy crap, it's a mess, and we have no idea which way it's going to go.
Yeah, that's the insight in many ways.
Okay, perfect. Holy crap, it's a mess, and we have no idea which way it's going to go. Perfect. That's where you want to be in the United States of America. That just feels great.
Feels hunky-dory.
Give me
but
some.
Look, we're starting season 8 on this message, so it can only go up from here for our listeners.
Oh, now wait a minute. It can only go up from here. Will you put that in writing?
No, not at all. Not at all.
No,
not at all.
Okay, well, give me some clarity as to the House and the Senate. Which way are they going to flip?
Yeah, it looked like the House is likely going to go back to the Democrats. You see the numbers. It's not going to be an off cycle. If you follow what you've seen in areas like New York, California, where Republicans outperformed in 2022, you see the Democrats take the House back, but again, narrowly, 10, 12-seat majority. But at least if there's anything, knock on wood, to say about that, Democrats have always been more disciplined when working with a narrow majority than what you've seen, what we've seen in the House over the past few weeks with a threatened government shutdown and stuff like that.
I give a lot of that, Dan. Wait. When you say that the Democrats work more efficiently, I attribute a lot of that, you say rightly or wrongly, to leadership. And when you had Nancy Pelosi and others, you had some very strong. I mean, I always thought, and I made a couple of enemies saying this. I thought Nancy Pelosi was probably the most powerful and effective politician in Washington. I disagreed with so much of what she did, but people got mad at me because I said she was an excellent politician. She was, still is, but was when she in her. I mean, it was very difficult to beat Nancy Pelosi, and there wasn't much that Nancy Pelosi wanted to get done that Nancy Pelosi didn't get done. Do they still have that kind of leadership on the left?
I am not going to stand here and say you can replace Nancy Pelosi.
Right.
I'm not going to say that. However, I will say that the team you have with Hakeem Jeffries and his lieutenants is working strongly, and they will be pretty motivated by either opposition to another Trump administration or supporting a Harris administration.
Okay, so you've got them motivated and you think that's organized. I can't understand why the row of five, the row of no, as I've called them in the past on the Republican side, can't seem to figure that out either.
Well, I'll also say,
they don't get motivated.
Look, this is a longer discussion, but I think some of it comes down to incentive structure, that as a Republican, you're more likely to get votes and money if you're seen as going it alone and being a bit of an outlier on media, and that's how that row of no succeeds. On the other hand, the Democrats, that's all through leadership. It's all about organized giving, staying with the party line. The incentives are just very different on either party.
AOC doesn't pull things to get them to unravel, and that
another 40-minute podcast we could have about the maturation of AOC in Congress. That's fascinated me compared to like Rashida Tlaib, the now unseated Cori Bush, and others. So or excuse me, soon to be unseated, as Corey
That's
Bush
a good
also.
point. We should actually talk about that at some point. There has been a maturation of AOC. Believe it or not, folks, the level of bombast is really diminished, and well, and thank God for that. But all right, Dan. The Senate is going to go Republican here.
I think narrowly, look, you see the trouble that Tester's in. Of course, Democrat Tester up in Montana, I don't think he holds his seat. You're already losing Manchin to retirement. So the math is against them there. Look, you always hear things like the polling is close in Florida, the polling is close in Texas. I just always see that as Lucy in the football for Democrats when it comes to those Senate races. It always seems like it might get close, but Charlie Brown ain't kicking that ball.
Okay, so no matter really then who gets elected here, Republican or a Democrat, in terms of the president, if we're investors and we're looking at some of the Trump tax cuts and particularly the estate exclusions that were $12 million per person reverting back to $6 million, is there anything that can be done to preserve those? Let's say Trump gets reelected. Will those tax cuts be preserved? Can they get them through a divided House and Senate?
Look, to get for Trump to get his tax cuts extended, he would need a Republican House, he would need a Republican Senate, he would need them ready to hit the ground running with budget legislation, ready to handle this through reconciliation. It has to go through the budget process because in all likelihood, no one's going to have a filibuster-proof majority. So that's the scenario there. You need that red sweep if you want those tax cuts to endure in any solid form. On the other hand, if you have this mishmash, you either have to find compromise, which we haven't seen much of in the past 3, 4, 5, 6, 10, 12, 20 years, or you have to say, what is the environment going to look like if these do sunset, and what then is the cleanup after some kind of economic hit or reaction?
Okay, so we will. We don't have any insights other than this is a nail biter. It's a bit of a mess. Let's go internationally then, and we'll let all of this just work its way out. And as we have more insights, folks, if we have more insights and Dan gets a sense that we're going to take a clearer path here, we'll have interim updates on the FarrCast. They might be very brief, but I'm going to have Dan back over the next 40 days, and we're going to post some additional FarrCasts. They could be brief, but we want to follow this for you. All right, Dan. Internationally, I want to go to Israel. What's Bibi Netanyahu doing? I mean, this is an expanding conflict. What do you make of it?
Well, look, we saw this remarkable pager and walkie-talkie attack staged against Hezbollah. We've now seen probably one of the most extensive military air campaigns we've seen since the U.S. invaded Iraq in 2003. And you really see Netanyahu and the Israeli military trying to neutralize Hezbollah in Lebanon. Question becomes, how long do this go without Iranian retaliation? The Iranians thus far have said to Hezbollah, look, we're right behind you, but about 1,000 kilometers behind you. Hezbollah is largely on their own. And right now, the question is, does the Israeli air campaign take out these missiles? And the Israelis have released stunning photos of, what look like civilian homes in Lebanon with rocket launchers protruding out of the attic. That if they can hit these rockets that threaten northern Israel as well as cities like Tel Aviv, if they can neutralize that, it certainly goes a long way to preventing Israel's nightmare, which is that all of its enemies engage at once. Iran, Hamas, instability in the West Bank, Hezbollah. If that all happened at once, that's their nightmare. So they're trying to take this piecemeal and really focus on, right now, what I see as an air campaign. They're not putting ground troops into Lebanon, avoiding what they saw as the quagmires they fell into in the 80s and the mid 2000s.
So Dan, one of the concerns that I've seen lately is that we are sending troops more troops over towards Israel and over towards this conflict. Donald Trump is some of the analysis I've read, is going to cheer this as a huge Biden mistake 40 days before an election to put U.S. troops in harm's way over a conflict that doesn't belong to us in a time in America that's growing more greater sense of isolationism and protectionism, and we don't care about anything else around the world. We ought to be more concerned about ourselves. How do you view this politically and strategically, both? Because those things could be in conflict, couldn't they? Could be opposed.
Certainly, certainly. I see if you sending these troops overseas, if there's the fundamental mission of protecting our assets that are already in the region, and B, preparing to evacuate U.S. civilians and other civilians from these countries should the war expand. I don't see that as sleepwalking into another conflict, but merely maintaining and protecting our posture and using our military for what we use it for. Now, the question becomes, this is a paradox. President Trump says he's no closer to Israel, he says Joe Biden and Kamala Harris are Palestinians. I don't know why he thinks that's an insult, but he says that, and here's the question. You can't be the closest supporter of Israel while on the other hand say you're going to pull back U.S. obligations from the world and our allies.
Yeah. I mean, you're right about the Palestinian thing, of course. I mean, I've been to Palestine. If you've been to Israel or if you've been to Bethlehem, Bethlehem is in Palestine. You all know that? Bethlehem is in. And okay, I'm going to go ahead and tell you, I did not know. I'm over in Israel. I'm in Jerusalem. This is how, I guess, stupid I am. I didn't realize that Bethlehem was in Palestine. And when they said, do you want to go to Bethlehem? I said, sure. When I had to cross through the bulletproof gates with the guys with machine guns and went from a country where average per capita income was $13,000 a year at the time to where it was $1,300 a year, and there was desperate poverty. It was a very difficult and sad-looking country, Palestine. But of course, as you go to any country around the world, folks, the people you meet are lovely people. They're people who are trying to live, and people with children and grandparents who are trying to get by. And in most countries, that's the majority of who's there. And then you have these crazy extremist people. And I suppose we have them here too. But I always try to remember the grandparents and grandchildren and the people who are just trying to live their lives in any country, whether it was the same way when I was in the Soviet Union, the same way when I was in India. You travel the world and you learn a lot and you gain a perspective. And anyway, I encourage you to do that. Dan, I got to go. I'm over time. Tell me, what's your best read over the next 12 months? What happens Israel, Palestine? Is this conflict greater and expanded, or has Netanyahu gone so hard at it that it's sort of at a point where it can be resolved?
I think this in some ways continues to fester, perhaps escalates later, closer to the election even in some ways. Look, the Hezbollah is definitely reeling from these early blows. There's no doubt about that from how they've been hit, but they will look to retaliate. The Iranian side will look to come into this. And again, we cannot underestimate and continue to look at the signs of how Russia, Iran, China, North Korea all work together to destabilize and make these things harder. You see North Korean weapons going to Ukraine. You see Iran asking the Russians to give the Houthis more accurate anti-ship missiles. All these things coming together, showing that these folks are working to destabilize the region and the world.
Dan, we will be back for some interregnum meetings here as we go forward in the next 40 days prior to this election. And folks, one of the things that Dan said, I think we've got to really start to listen to is, don't expect to wake up on Wednesday after the presidential election knowing who the president of the United States happens to be. And don't think we might not end up right back at the Supreme Court before that's ultimately decided. Coming up, Jenny Harrington. Now you know we can start season 8. One of my favorites. I was with Jenny this week. If you're not jealous, you should be. She's just wonderful, and we had a great time together. Dan Mahaffee, you're the best. You'll come back, yes?
Of course. Thank you, Michael. You're too kind.
Season 8, you're too kind. We always learn so much. Ladies and gentlemen, please stay with us. We'll be right back.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. Thanks so much for joining us again here now in Season 8 on the FarrCast. Can you believe it, folks? And thank you all for being with us for so many seasons and for your notes and for the emails and for the texts and the everything else. It's really terrific, and we like hearing from you. We really do. We try to find some really cool guests, and we, of course, have cool guests for you this morning, starting with Lebenthal and Mahaffee. Jenny Harrington is one of my favorite people in the entire financial industry, favorite people on CNBC, off of CNBC. She's even more fun and even smarter. Just gotta tell you. Hey, Jenny, welcome back to the FarrCast.
Good morning, and thanks for having me.
We're glad you're here. Glad you're here very much. Jenny, I've talked about the markets still flirting with these all-time highs. We have an S&P now that's pushing 6,000, threatening 6,000 from these levels. Over the past few days, we've seen a return to the risk-on trade where the Dow has well underperformed the NASDAQ. As futures are opening Thursday, it looks like that's going to happen again and in a rather significant way. NASDAQ and the tech stocks and the chip stocks and all the fun stuff continues to be fun. The market has broadened out. We're going into an election. We hear people tell us that when the Fed has begun to change course and begun to ease, you get a 10, 15% kick from those levels. Feels like we're getting 3 or 4% kick in the first week. What do you make of what's going on in markets? Before we talk about investors, what do you make of what's going on in markets?
I think there's a quiet bifurcation starting to happen. And if you look back to the past quarters, what you see are funny little things like REITs and utilities up mid-teens, double-digit returns. So I think utilities were up 17%, real estate investment trusts were up 14, 15% for the quarter. Technology up only 0.11% for the quarter. So you're seeing divergence and you don't notice it because the market's been up another 4 or 5% during the quarter. But I was on CNBC this Monday, and they do what they always do, right? They started off where they start with the different strategist headlines. And I thought the Citigroup analyst said it well, where it says, Citi says upside at the index level is going to be tougher to come by. And they say the broad index upside is getting harder to achieve as we run through the base case levels. And so that's a very nuanced statement. They're saying upside at the broader market level is harder to achieve.
Right. They're
not commenting on upside overall. And so I wouldn't be surprised if, as we move forward into the end of the year and get into the fourth quarter, I think we could see more of the same of that. Because to your point, Michael, at these really high levels on the S&P 500, I think broadly the valuation is hard to justify.
Well, we've had sort of bifurcated results, right? I mean, we've had tech stocks that have done fabulously well for the past several years, and it seems that they've gotten a little toppy, peaky, or they're taking a pause. One of those things is true. They're either getting ready to go lower or they're taking a pause that's going to take them higher, and who the hell knows? Very difficult to tell. But that some of the other stocks have finally found some footing and other companies are starting to make some gains, I think a very good thing. And with a stock market rally like we've seen that has been so narrow and driven by so few stocks, the Citi comment to me makes a lot of sense. And what I hear in that comment, it's going to be a stock picker's market. And that happens after broad rallies, and that happens after bifurcated performance over several years. you've got to figure out what you're going to own for that longer term. And what might leave you in good stead is stuff that hasn't done very well, while the stuff that's done very well either takes a pause or goes lower. So that makes sense in the specific level. There's always something to own in the markets at the right price and the right situation if your time horizon is appropriate. And I think the time horizon now becomes even more important, Jenny, because short-term volatility and a correction and perhaps something that's gone too far or a pause that's going to, who knows? But for Fred and Ethel in their 50s and 60s, thinking, do I stop contributing to my 401k? Do I need to own more of this? Do I need to own more of that? I mean, I start screaming out loud and go, no, you need to turn off the television and you just need to own stuff for the long term and forget about all of this noise.
And sorry, that's the perfect advice. No, right? You never stop saving, because the short term can be up, down, and sideways. The long term is always up. And I love that you said turn off the television. That's why I got so excited. I had an I had an interesting conversation this week. So I am coming to you from my sister-in-law's house down in Maryland. I've been traveling all week to Maryland, DC, Virginia, seeing clients. And my very first client meeting on Monday night was with a lovely, lovely client in Gambrills, Maryland. And Gambrills of all places.
Gambrills, Maryland.
Yeah, there's a great restaurant there, So they were nice. They met me halfway and we had a lovely dinner. And the client said, you should give me a shout out on CNBC. Right. And I kind of, I can't give someone a shout out. And she said, no. What I mean is, you should talk about how I came to work with you. And what she was saying is, prior to working with me, she was doing this all on her own. And she was spending 8 or 10 hours a day watching the TV in a desperate attempt to figure out what was going on, why things were going on, how things were happening, and what she should do. And then she said, and then once I hired you, we could actually start to enjoy my husband's retirement, me taking my foot off the gas a little bit. I wasn't watching TV all day. I wasn't running scared. I wasn't scrambling. And we had an interesting conversation about that. And I said, the thing is, us professionals are trained to tune out the noise. And I was thinking about how much noise we tune out and how many headlines we tune out. And so what have we been needing to endure for the past 3 months, 6 months, actually the past year? How many rate cuts are there going to be? We started the year with the threat of up to 6 rate cuts this year. Now we got a 50 basis point cut. All those cuts were supposed to come in March. They didn't. The media's used the rate cuts as fodder to catch eyeballs and make really big stories. And the reality is it didn't matter how many times they cut rates. All that mattered was that they were going to. Everybody knew they were going to. And the direction of rates at the beginning of the year was headed down. And that's what matters most. And so for us professionals, every time we read a headline about 50 basis points, 25 basis points, 2 cuts, 4 cuts, it takes 20 seconds. No, probably not even. It takes 2 seconds to process, move on. We know where we're going. So I think the tuning out the noise is really important, but it's also sifting through the noise. And there's a famous quote by Vladimir Lenin where it says, decades can happen in weeks. I'm probably screwing this up, even though Harry just told me the accurate one.
Harry, give it to us. Go ahead, Harry. He's got it.
What's the actual one? You have it in front of you, right?
There are decades where nothing happens, and there are weeks when decades happen.
Thank you. So there are decades where nothing happens. And I think if you watch TV and read, a lot of it's for nothing, because there are decades, there are months in this business where nothing happens. And then there are weeks where everything happens. And so for us professionals, we know where to tune out the noise from the decades where nothing's happening. And we know when to dial it up and pay really sharp attention when things are actually happening.
I have an idiot comment that becomes reflexive. It runs through my head, ladies and gentlemen, when I listen to people on TV and when I read them in the newspaper, and I'll hear those 3 catchphrases that I've heard all my life. And I won't tell you what they are, but I'm sure you've heard. And I just think, oh, that person's an idiot. That person's an idiot. That person is trying to say something that's incendiary to get themselves on TV, to make some big bombastic statement that's going to scare folks at home, going to get their attention, going to have them worried at home tonight for absolutely no reason. And automatically, within the first 2 or 3 sentences, I go idiot and I stop listening. And it's a great gift when you can develop your idiot filter. Just say no. My partner, John Washington, one of the most brilliant and successful investors I ever knew. I learned so much from John Washington. John Washington went to medical school at Harvard, decided he didn't want to practice medicine right at the end, and decided investing was more for him. I mean, if you can believe such a thing. And was a very good investor. He said, masterful inactivity and benign neglect will make you more money than anything else. Masterful inactivity and benign neglect. Jenny, talk to us about masterful inactivity, because I've always said you have to give, once you do all the research, you've got to give the company enough time to do what it is you think they can do. And that's not going to happen in the next 2 weeks. And it's probably not going to happen in the next 2 months or the next 2 quarters. It may, right, but you've got to give it time, and you've got to give yourself some credit that your research was worth a damn.
That's right. But there's also an extra bonus to masterful inactivity, which is reducing your taxes. One of the things that I struggle with as a portfolio manager is when you take a long-term horizon and have relatively low turnover and you're not trading constantly, your clients aren't paying taxes over and over and over on every short-term gain, long-term gain, whatever it is. By kicking off the taxes, you're dramatically improving the client's bottom line. As a portfolio manager, that does not show up in your returns, right? It just shows up in your clients getting richer. But I've been listening to this book on tape, Poor Charlie's Almanac, and it's the 11 best Charlie Munger talks and speeches. And it's something that he really, really, really hammers on, is that idea of long-term, let it bake. And he gets into a lot, both your point, which is theoretically, if you've done your homework on the manager or on the company, it doesn't happen overnight. It takes time. There's compounding. There's like real compounding growth that needs to come from that portfolio manager or from the investment in that company. And that compounding is a long-term thing. But Charlie also talks about taxes a ton. And that's really, really, really important to consider. And so you could have a portfolio that's up 18% in a year, but if there were, I don't know, almost 18% of the return was from short-term capital gains by turning and burning, knock 40% off that, right?
Absolutely. So I'm going to take a shot at the big bank portfolio management departments, because these things have made me crazy for years. The big banks make folks feel safe, but one of the things they do is as Buffett says, they diversify. They diversify to a ridiculous extent. You'll have 150 or 160 stocks. I know you've seen these portfolios in a portfolio. And then when you look at the past month or past quarter's activities, you see them adding 18 shares to some small 30 basis point or 40 basis point position within a portfolio. What in the holy hell is the point of having a 40 basis point position in a 40 basis point holding in a portfolio? If the damn thing triples, you're up to 1.25%. Oh, fabulous. What a waste of time, activity, transaction costs, frictional costs, capital gains, everything Jenny just talked about. If you're going to invest, you do the work, you think long-term, and you put your money where your mouth is. And if you can't figure it out, buy the index fund. But for God's sakes, don't quit paying 1.5% to these dumb banks that are just going to sit there and generate transactions and enough activity to make you think they're doing something. They're not helping you. They're just not helping you. Sorry to my friends at the banks, but tough. The mediocrity isn't getting any of us anywhere. Sorry, Jenny, for the rant, but you've seen these portfolios, haven't you?
Oh, one of my biggest client is with me because his accountant would lose his marbles. It was a $30 million back then. It was a $30 million equity portfolio that would have 10 and 12 share trades on it. Literally hundreds of pages on the 1099s.
Yes.
And it was with one of the big banks because they were constantly rebalancing. And they had the guy in multiple SMAs, separate managers. So they had, I don't know, 10 or something separate managers. They were constantly balancing. But let's be clear on what the point of that really is. What the point of that is is to achieve mediocrity, because they know that if they can be very mediocre and make you think they're doing something, they're probably not going to get fired, right? So they can always say to you, hey, you had a market return. We tried really hard. Because you know what clients, this is where clients give us a hard time, Michael, which is when there is masterful inactivity, they don't think it's masterful. They just think you're doing nothing. Clients do love to see something going on in their portfolios. They get bored when nothing happens. And I think that that's our job, to train them into understanding that it's intentional and purposeful, oftentimes, not, not negligent inactivity.
Yeah,
That would be a good
great.
debate.
Not negligent
Master,
activity. That's right.
yeah. We should have a debate where the line is between negligent inactivity and masterful inactivity.
It's I can only what I can tell you is it's at least 3 or 4 years from now. It's at least 3 or 4 years from now. I'm going to take one more shot at the banks, ladies and gentlemen, and I want you to look at your portfolios. I'm sorry, but I often also hear, "Oh, but they gave me a great deal. I only pay 47 basis points." Really? How many proprietary products do you have in that account? How many of the bank funds? What slug do they have in private equity in that account? Because when we go through it, you're paying 100 basis points, and clients are pissed when they find out that the bank's been making them feel good about their fees for so long, and then we break out the fees and say, I'm not selling or doing anything. I am just shining a bright light to say, excuse me, these are the facts. You're telling me something that's not true, because you're being told something that's not true. So you're getting a mediocre result, and you're paying much more for it than you think you are. But yes, I also had a client. This has been a lot of years ago, but it was about a $7.5 million account, and this was in the late '90s, and we got fired because we didn't trade the account enough. And they came in and told me that. This couple came in and sat down in my office at my conference table and said, "You're not active enough. You're not doing enough in this account." And I said, "You want to see my numbers?" But no, they didn't. They had it in their head the way that money should be managed. So I guess here's another final point. If you're so damn smart and can figure out exactly how your money should be managed, then don't call us. But when you call us and you say, "Look how smart Jenny Harrington is," and I assure you she is, and she's got the academic credentials to back it up, let her do her job, will you please? And if she tells you it's going to take her 5 years, listen to her. I mean, you can't go in there and say, "Well, I'm going to look again in 9 months and I'll reassess because I'm going to." No, you don't go in and reassess on your schedule. You agree to her schedule, hold her to it. She will be held to it, I promise. But people are their own worst enemies when it comes to managing their money, because so much of it is counterintuitive. So many people want to have activity and have a sense of control. That's not the way investing's done. Jenny, I'm talking too much here. Let's have a final word for Fred and Ethel, if you don't mind, because I got to go. But you're so nice to be with us for season 8 of the FarrCast.
All right. I think the final word's got to be going back to the top of the show, which is tune out the noise. Not that much is really happening. Not that much really matters. There are a few things that do. And when they do, pay attention to them. But for the most part, decades are happening with nothing.
Yes, decades are happening with nothing. And during those decades, I have a team of analysts following every company in our portfolio and looking at new companies and studying the economy. While we might not be moving the chairs around, we're watching every seat. Jenny Harrington's firm does the same thing. Jenny Harrington from Gilman Hill Advisors, my very great friend. Thank you so much. That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world, now in season 8, bringing you insiders to better understand the world around us, globally, our economy, what's going on in Washington, and that's going to happen on Wall Street, and how it's going to affect your portfolio. We're so grateful, Harry Jennings and I and everybody at Hightower and Farr Miller in Washington, for your continued listening and involvement in the FarrCast. Please share us on your social media, and we'll be back again next week. Do it all again. Update it. Remember, 40 days and counting to the presidential election. Remember your biblical references. 40 is one of those important numbers. Jesus wandered 40 days and 40 nights in the desert, New Testament. I think Jesus might have had it pretty good out there in the desert rather than what we're going to go through in the political situation over the next 40 days and 40 nights. Oh, well, hope I didn't offend anybody with that one. See you next week. Have a great weekend. I'm Michael Farr.
Thanks for being with us this week as we kick off the 8th season of the FarrCast. And thanks to this week's guests, Jim Lebenthal, Dan Mahaffee, and special guest, Jenny Harrington. We hope you enjoy the show as much as we enjoy making it for you. Please share it with friends and colleagues. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And as always, if we can be of assistance at Farr, Miller & Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'm happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. We'll be back with you next week, and we are working on a couple of specials as we move through the election season and into the end of the year. Stay up to date by subscribing on your favorite podcast platform so you never miss a new one. Take care, stay safe, and stay healthy. And thanks for listening to the FarrCast. Wall Street, Washington, and the world. Farr, Miller & Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr, Miller & Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr, Miller & Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr, Miller & Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.